Hi everyone, Realtor Josh Kepke here with Vancouver Real Estate today at McDonald Realty. I have a question for you for this month's How's the Market segment. Are we on another bull run in Vancouver real estate? Really? Greater Vancouver sales are up 55% year over year this month, and that's thanks in part to really what we call weak base effects. What that means is in November 2018, sales were the weakest they've been since 2008. So when you're comparing this month compared to something way down, it's going to make that year over year number look huge. What I will tell you is the rate of price declines is easing. We're seeing the detached homes down 5.8% in price and condos down 3.8%. Canadians are borrowing again with the easing of financial conditions. Global central banks are aggressively easing monetary policy, which has helped lower the borrowing costs and encouraged buyers off the sidelines. The result is increased sales activity combined with a drop in inventory, and thus we get media headlines suggesting the hype has returned. So what's going on in the detached market? The detached market sales volume is up 60% from last year. Now, again, weak base effects is the root of that. They are down 4% from the 10-year average, and the new listings are down 11% and falling. So why are the new listings falling? Well, one, we're not really building a lot of single-family homes right now. Two, sellers are not forced to sell. This is not the Big Short. Interest rates for the Big Short were up, credit was unavailable, and foreclosures were flooding the market. These are three things that are not happening right now in Vancouver real estate. We are seeing 5.9 months of inventory in the detached housing in Greater Vancouver right now. That is almost a balanced market, but it is just sitting continually in a buyer's market, like much of the rest of much of the rest of the market. Now, different story when you look up to the luxury products. If we look at houses available for sale above $3 million, there's 19 months of inventory. There is healthy activity and stable prices, however, in the entry-level products. So entry-level houses are still moving quite well. This recent momentum is really pointing towards growth in the near future, assuming all conditions remain constant. So let's take a break for a second from the products. I want to talk to you about a guy I know who's called Dane Itell, puts out a report and his company's Itell Insights. He's an analyst here. He takes a different approach to evaluating and forecasting for the real estate market. What he uses is technical analysis, and so what he's saying is the technical bottom for detached houses will come in 2021. Now, this is, again, not all markets are created equal. So some markets this year you will see not much change in the way of prices. Others, he claims you'll see significant correction. So technically, we're still in a correction, and the market is hanging on to that 10-year uptrend. A lot of the purchasing you've seen in the last 2 quarters is stress test mitigation purchasing. What that means is, see, prices were down 19% earlier in 2019, and that's basically your stress test. When the stress test was implemented, that knocked 20% off people's purchasing power, which sidelined them, took them out of the market. So now that the market's come down that 19%, those people are coming off the sidelines and back into the market. This is need-based buying. So 2020, he claims we're going to likely see much of the same as 2019, with investors coming back to the market in droves in 2021. So it's not to be negative on Vancouver real estate, but it is something to consider why you're shopping for real estate. What are your plans? Because if you are an investor, maybe it's not just the right time yet, but if you're looking for your own home and you want to stop paying for somebody else's mortgage through your rent and start building your own equity, now might be a great time where you don't have to compete with the investors, because the investors make up about 30% of the market. So let's get back to it, the condos. Condo market is up 50% year over year, which on the sales volume, again, that is well below the 2015 to 2017 frenzied activity. It's a local market right now, I've said that before. As people continue to struggle with affordability and condos remain the only option. The new listings for condos are down 17%, and again, here's the reasons why. Holding power, and a renewed sense of confidence amidst investors who own those condos based on the recent trends and the hype in the media. So sales are up, inventory and listings are down. Inventory at the moment remains at 3.4%, which is a seller's market, and a seller's market tends to mean upward pressure on the sales prices. That means the prices are going up in the near term. Will this low inventory last though? Well, we're looking at 36,000 units completing for new construction in the next couple of years here. So it's unlikely. The average price per square foot right now though, out of the last 4 of 5 months on condos, has been edging up. All signs point to higher prices in the short term. The condo market looks particularly strong right now. Especially for anything resembling affordability. That is the name of the game in Vancouver real estate today, affordability. So what about the prices on condos? Well, in Q2 of 2019, the average price of a condo was $643,000. It's $670,000 today. And we continue to bounce around this middle threshold and range of $30,000 there. So what's going to happen going forward for 2020? Well, why don't you give me a call? Comment on this video below. But get in touch is the best way to talk about your specific market, because as I said, markets are not all created equally. So reach me, Josh Kepke, realtor at McDonald Realty, host of Vancouver Real Estate Today podcast. Well, I'll call it the video podcast. And yeah, my number, 604-313-9805. Again, comment below. Follow us on social media. Follow me on Instagram at Josh Kepke, and Vancouver Real Estate Today on YouTube and Apple Podcasts. Thanks so much. You have a Merry Christmas, and we'll look forward to seeing you in the new year. Bye for now.